Hello, anybody who's out there listening to us. Welcome to the R&M webinar. We're all sitting here waiting to get ready. One of the central themes of our presentation today, our talk today, really, was a celebration of all the positives. For one of the things, I think the financial services industry has had a lot of stick over the years, but I think this year is one thing where we can all give ourselves a big pat on the back. And say, well done. That really was the reason for inviting you to come along, to send you all some cocktails and listen to some of the things that we've got to talk about today. But first off, I think we ought to start with our cocktails. So if you have your cocktail there, and I have got mine here, you can read the instructions on the back, which I did, which basically says on my one that I've chosen, I've got to turn it upside down, presumably to let it mix. Then turn it back out the right way, to grab my glass with the ice in it and pour myself a drink. I invite you all to do the same. Right, I've done that. So I shall say cheers to everybody and well done. Right, now I think it's time just to introduce our panel, the people we've got here today. First of all, I'm going to introduce my colleague Fiona Larwood. And Fiona, perhaps you could tell us which cocktail you chose.
So I've chosen the Cosmopolitan, which I have in the wrong shaped glass, unfortunately, but never mind, it still tastes very nice.
Good, thank you.
I'm a surveys manager at R&M. And some of you may have received emails from me if we had any queries on your responses, or indeed if you're part of the banks, we may have been in contact anyhow. So that's my role here at R&M Surveys.
Good, thanks, Fiona. Let's turn now to Rob Ward. Rob, what was your drink of choice today?
So I am on the Earl Grey iced tea. Which is very tasty. And I did have to explain that I am of sufficient age now that had this been alcoholic, I would have struggled to speak intelligently. So I had to go dry, but it's lovely.
Thank you. Let's turn now to Rob Lowe, Pictet. Rob, what did you choose?
Evening, Richard. I let Fiona choose mine for me. It's a Paloma, which is tequila based with lime and grapefruit, which is very pleasant indeed. Well chosen, Fiona.
And last but by no means least, let's come to Tim Wood.
Hello, everybody. Well, I chose the Earl Grey iced tea, which may surprise some of you, but I'm on a dry lockdown month, so I'm gone for a mocktail rather than a cocktail.
I'm very impressed. I just hope lockdown doesn't go on too long, Tim.
Me too.
Okay, good. I think it might be quite interesting if we ask, I'd be interested to know what everybody has chosen as their cocktails. So Fiona, could you just run that little poll? Perhaps we could get everybody to complete for us and see exactly what it was that they all got. I've got an idea in my head what the most popular one might be. I suspect Fiona actually knows what the most popular one might be since she did all the ordering. But let's just...
That should be up on the screens now. I hope everyone can see that.
It is all there, and so what do we got there? It looks like the Bramble's the winner. But yeah, okay, fine. Some of us have all got, and somebody's saying it's delicious. That's good, excellent. Right, do you want to close the poll there? Yeah, Bramble the winner. Excellent. Excuse me while I fiddle around on my screen. Okay, so I'm going to now just share with you my screen. I'm just going to run through a few, I hope, simple slides, if I can get this sorted out. So welcome to the webinar today. We're delighted to have everybody here. What we're going to talk about today is just a quick review of the survey that we carried out earlier on this year in May, just a few 6 weeks into lockdown in the UK, just to give us some idea what the response was, the very positive feedback that we got. I'm going to run through fairly quickly the results that we did of the 2020 Investor Services Survey, and also the Fund Accounting and Administration Survey, which finished not that long ago. We've got another quick poll for attendees that we're going to run through at some point as well. And then we're going to chat with our panelists to get their views and feedback on everything. And then finally wrap it up. I'm kind of expecting this to run for about 30 minutes in total, so won't keep you all here too long. So if you've got any questions, you can send it via the Q&A link, and we'll endeavour to deal with them as they come up. So first of all, the COVID-19 survey that we carried out was one we just sent out by email, really to our database globally. And we got quite a few responses in from literally all around the world, quite a diverse geographic selection from Papua New Guinea right through to California on the other side. What it showed us was that all the feedback we got when we were asking people how well investor services providers had dealt with the whole lockdown situation, COVID-19 situation, the feedback was almost unanimously positive. Everybody was very impressed, felt that the contingency plans were very robust, had gone into place and worked very well. Clearly, and some of these things really haven't changed from May, there are some issues with remote working, not least is connectivity, team spirit, working space. I know I have two my offspring who both work from single bedroom flats with their partners, and they're struggling a bit to find the space to actually deal with it. There were also some concerns that were voiced about resources being refocused because they were being redirected to dealing with COVID-19 rather than perhaps going into some of the other projects that are being planned and budgeted for the year. And I guess the other message we got as a take from all of this was that the future is uncertain. Now, this is back in May, and I can't say it's any better now than it was then. So planning is difficult. Moving on to the Investor Services Survey, which was carried out, the actual data gathering for that was carried out before COVID happened, before the lockdown happened, although we didn't publish results until afterwards. But from this, you can see the overall ranking, where everybody came. I think the fact that overall scores were up slightly from previous year was a good indicator that service levels were continuing to improve. We will be running that survey again fairly soon. I think we're due to go to the field at the end of this month and be running it through to the end of January. So again, we'll be testing the water. We'll be asking the same questions as we normally answer, with a couple of supplementaries, really just asking again to check how people are, or how providers are dealing with the whole COVID situation, and how our respondents are getting on, because I think that's very interesting to find out too. We've produced some other tables in that survey too, which cover what we call the experts, which is really people providing us, fund managers generally, providing us with multiple responses. So they're responding on 5 or more different custodians. So we're able to sort of look at them and be able to compare how each of them see the different providers out there and produce a table for that. And the third table that we get is then looking at the top 200 asset managers globally and how they rate their custodians. That's based on, obviously, on assets under management. And that, yet again, shows us a slightly different story. Finally, on this survey, and this is really just to flag up for anybody who would like to get a little bit more information. What we produced from the results is a profile of each of the banks. Now, I'm not going to run through them all here. I've just put one up as an illustration, and alphabetically, BNY Mellon came first. What we do is, you can see along the x-axis all the different categories of questions that we have. So into different service categories, running from settlement and safekeeping through client reporting, proxy voting, regulatory support, all the different areas. And you can see where, if they're above the line, they are stronger than the industry average. And if they're below the line, they're weaker than the industry average. So that gives an interesting profile of all the providers. So if anybody is interested and would like more information, do get in touch with myself or Fiona, and we'd be happy to send you some more information. So moving on to the fund accounting survey, when did we run that? We ran that, it was slightly later than normal this year. So we ran it in July and August, and I think we closed it in early September. So it was running during the lockdown, well, through the COVID period. We got some positive results here from a number of different people. We've broken those results out into 2 different groups, geographic groups, to just have a look at that. The main ones being here in the UK, where HSBC came top, and also secondly across mainland Europe. The bulk of that was stuff being run out of Luxembourg, but we do get a few other responses from some of the other European countries as well. So again, any more information required on that, happy to provide it. Don't want to take up your time running through all of it here. Just quickly, we've got some client comments that we got back, which I thought was quite interesting. I hope that everyone is doing as well as can be. Our company is one of the fortunate ones in that we are still operating at full capacity while working remotely. I'm a train and bicycle commuter to the office, and I do miss the camaraderie of my fellow commuters. Working from home is not for everyone. Think of the people having only 1-bedroom place or children at home, or plus cybersecurity and data protection are seriously in danger and a big problem. The biggest compliment I can pay is that we wouldn't even know staff weren't in the office. There has been no deterioration in the service levels whatsoever. And that really, I mean, I've taken that out as one quote, but that was a very consistent message across the board. So basically, in summary, it's been a challenging year for everybody. We all know that. Contingency planning has worked, which has been excellent. Service levels have remained robust, and be interesting when we do the next survey to see whether that's still the case, and I'm sure it will be. What's the COVID cost? Perhaps some projects have suffered. Some people's mental health may have suffered. Working practices are different and changed. What's going to happen going forward? What might happen to remuneration? There was some talk a little while back of one of the big tech companies, was it Google? I can't remember, or Microsoft, Google, I think, who said they might be paying their workers based on where they're located rather than what the job was that they were doing. So all sorts of different things going on out there at the moment. Okay, so that's run through my slides. I think what might be interesting to do right now is just talk to our panelists and get some feedback from them. So first of all, I'll turn to Rob Ward, if I may. Rob, could you tell us a little bit about RBC for those people listening who may not be that familiar with them? And I know you're a Canadian bank, obviously, with a name like that. And you've got your investor services operation headquartered in London, I believe. But perhaps you could just fill it out a little bit for us.
Sure. So we are a Canadian bank. Our investor and treasury services business was formed sort of off the back of the RBC Dexia days. That is the explanation for why we're a Canadian bank, but the investor services business leadership is largely based, but not exclusively based in London. Our business is roughly 50% Canadian, roughly 50% European and Asian. Our Asian presence is largely limited to Hong Kong and Singapore, with a big operations center in Malaysia. We used to be present in Australia, but that business is in the process of being transitioned to another provider. So again, largely European, largely Canadian. I would say best of both cultural attributes of a Canadian, North American business plus our long European history.
Rob, what exactly is your role within the company?
Sure. So I'm the head of our client experience group within the investor and treasury services business for Europe and Asia. And client experience for us is the combination of what most people would recognize as client management. So not the sales arm, but the relationship side on an ongoing basis, strategic change that clients would require in order to support their business objectives going forward. I also run our onboarding function, and I run what we've called our digital client experience team, which is where we house our digital capabilities using leading edge type technologies to do data visualization, data analytics, data provision in support of the services that we provide to our clients. Again, that's an area that we're investing in because we really see that as the future of how clients get maximum value out of a provider like ours.
Okay, and can you tell me what the experience has been at RBC since COVID sort of threw us all into some chaos?
Sure. So I'll just make a few comments. So COVID really made us think about how and where we work and about the measures we needed to take to protect staff and maintain continuity of services for our clients in a lot of detail. So pre-COVID, our crisis plans, and I know you said, and the polls suggest that everyone said your business continuity plans worked. I would say that the plans that people had in place weren't the actions that were used in the peak of COVID. I think everyone had to take their plans and do revisions to them pretty heavily. I think 2 years ago, we had said, for example, in a response to an RFP, our contingency plan is we'll send everyone home. I think we would have got a lot of questions about that. But it turns out that that was what we had to do. And we had to figure out how to make that work very quickly. And fortunately, with some good tech support, we were able to transition to an almost 100% work from home environment, where actually we saw the ability to provide continuity of service and quality levels was maintained, if not increased, in that period, which is pretty amazing. I mean, COVID made us think about how we interact with our clients and our partners in the industry. As I'm sure everyone will recognize, we still process lots of paper. We require signatures on things, too many things. So in the lead up to the peak, we could see that some of this would be pretty impossible, right? If everyone was sent home, you're prevented from actually getting to the office. So we tried to identify tools through our digital capabilities that could further digitize these tasks, take away some of the dependency as much as possible on physical processing. So in very short periods of time, we deployed things like e-signature, more digital oversight, real-time digital operational dashboards, and encrypted email instructions. And we did those in a way that we wanted to go quick, but we also wanted to go smart. We didn't want to solve one problem, but create another problem that would lead to greater sort of incidents of fraud. And that actually didn't happen, which was fantastic. COVID made us think about how we have to help our clients. So we could deploy these digital tools pretty quickly, but we also heard from clients, hey, I actually can't adopt this without some support. So we prototyped and delivered some quick digital training tools, figured out ways to get things like tokens to people in ways that we couldn't have done before. Again, enabling our clients to interoperate with us on a more digital basis. So just in summary, I think COVID made us rethink how we operate and how best to support staff. And that was physically at first, right? Protect staff safety, keep them physically, okay. Increasingly, that's become how do we support staff's mental well-being, right? And you mentioned working from a single room flat for a prolonged period of time and repeat lockdowns can be straining. So we've deployed and introduced a wide range of mental well-being tools and support infrastructure to help ensure that employees can continue to work this way with the right level of support. We made changes to our model that were probably unthinkable 2 years ago, 18 months ago. And we demonstrated in partnership with our clients and other providers in the industry that we were all up for the challenge. So I think it is really appropriate that we're here today and we've done a little celebration because I think the industry did perform well. It had to perform well. And I think, this is a crisis where, as horrible as it's been, we've learned some lessons. We showed that we could adapt very quickly. We showed that we can adopt technologies quickly when we need to. And I think that speaks a lot for the industry. So thank you.
No, not at all. Thank you very much, Rob. That's very interesting to hear that. Can we turn now to Rob Lowe? Rob, you work with Pictet. Again, a bit like perhaps with RBC, not everybody is familiar with Pictet. It's a Swiss bank based out of Geneva, although I did see on a little video clip on LinkedIn the other day celebrating 40 years in the London office. So I thought that was quite good. But perhaps you could just give us a little bit of an introduction.
Indeed, thanks, Richard. Yeah, you're right. Geneva-based business with a legacy framework of being a private bank first and foremost. We have three key business lines, or three areas of expertise, I should say, across the bank at the moment. So we have wealth management division, which is the legacy private bank business, which has been around for over 200 years. We have Pictet Asset Management as well, and then there's Pictet Asset Services, who I'm representing here in the UK. Pictet Asset Services was built to be a captive back office to Pictet Wealth Management and Pictet Asset Management. So it's a natural progression of our overall proposition to clients, and we're now offering that to third-party clients as well. We have about 550 odd billion US dollars under custody, so it's a sizable book of business. And a little bit like Rob was explaining, we're European first and foremost. So there's a strategic review, or a strategic view that Europe is our home market, and it's very much a centre of attention for us. 40 years in the UK is well observed, Richard, yeah, and something the team have been celebrating. Started from very humble beginnings, just a couple of individuals here in the UK, and we've now expanded to have, I think there's about 300 or 400 staff now in the UK, out of a total of 1,500 staff for Pictet Asset Services, of which in total within the group there's 5,000 staff overall. So steady growth across the business, but with those three, I guess, core client segments that we focus on, being wealth management, asset management, and asset services.
Yeah, good. Thanks, Rob. And can you just tell me about your role in the organisation?
Sure. I head up the UK business development team. There's a team of 4 of us here based in the UK. It would seem a bit unusual that it's a small team, but a lot of the heavy lifting is undertaken in Luxembourg. Our Luxembourg colleagues, some of which are on the line, do an excellent job servicing some very complicated and complex fund structures. And there's Geneva team as well, of course. I think what we've seen is an increased interest in the UK overall from clients and from our partners internally as well. So me moving to the UK to Pictet 3 years ago now, and steadily growing the team, again, is a logical progression for what we're seeing clients' interest in. And we're focusing this effort really on 3 client segments overall. There's the global custody segment that is legacy business to us, very well established. We have our fund services business. I referenced my team in Luxembourg. They're heavily responsible for a variety of those Luxembourg and offshore fund structures and servicing of those fund structures. And then there's our independent asset manager or external asset manager book of business as well, which again is not only being a captive back office to our wealth management team, us presenting those services to third-party wealth managers as well. And that's managed through segregated custody with a full suite of ancillary services such as 24/7 trading, segregated mandates, bespoke reporting, and it's all through a single operating platform for a number of booking centres across Europe. So a pretty comprehensive value proposition overall.
And what's your experience been vis-a-vis COVID, and how has the organisation had to adapt to meet the challenges?
Yeah, I think Rob succinctly put kind of all the challenges that we're faced with very well. I think one thing that we had focused on from the very beginning is the client experience. So how to enable our staff to, support clients through what was very disruptive for them. It wasn't unique to obviously being a service provider, it was unique to everybody across the industry. So that was the priority for us. And, you know, hats off to a lot of members of the team, and particularly to our IT team as well, who managed to enable everybody to work from home or from a BCP environment very, very quickly. I think what it's done is, having gone through that initial, I guess, challenge for the first few weeks, who's working where, how are people connected, do clients have access to, you know, the right staff, are the telephones diverted or not? I think having got over that initial struggle, it was very much into a case of, okay, how do we mitigate some new risks to the business, such as cyber, as again Robert commented on, but also where do we focus our attention? And I think the client experience, I'd like to think, hasn't been that badly disrupted, and some of the responders that you mentioned earlier had said the same thing. I think we've turned our attention away from some of the priorities that we were focusing on as nice to haves, and refocused some of the priorities that are most important to clients. And that's got us thinking about, again, as Robert put, DocuSign, VeriSign, you know, do we really need wet ink in this day and age now? What does it mean to work from home? What's the additional risk there? Can we print things? Can clients get access to various different documents and information? So overall, it's been an interesting experience, I think, not just for me, but for all of us, certainly on the call, and from our clients as well. But only right, again, as Robert said, to be raising a glass today and celebrating a lot of hard work.
Indeed. Yeah, thanks very much for that, Rob. I turn my attention now to Tim, if I may. Tim, you're now, I know you've worked on both sides of the industry in your illustrious career, and you're now working in your own business. So do you want to tell us a little bit about Cooper Wood and what it is you're up to?
Yeah, sure. Thank you, Richard. So we set Cooper Wood up in June this year. So we're brand new, not 40 years, but more like 4.5 months. So it's brand new. And I set up with Rod Cooper. Rod Cooper and I have known each other for about 25 years. And we decided to set up Cooper Wood, and you can tell where we got the name from, with one simple aim in mind, which was really to add measurable financial improvement to clients and their businesses. And our clients, when we're talking about who our clients are both sides of the fence. So it's asset managers and fund managers and asset owners. And it's also asset services, so the service providers. And we do this kind of, you know, we've got three approaches to how we help our clients. One is through operational and supplier efficiencies, and there's a lot in there about cost. The other one is around revenue protection, relationship management models, client retention, etc. And the other one is about new business growth, and the pressure on both sides of the fence for new business growth is pretty immense. But the real difference that we have discovered from the feedback we've got from the people we've been talking to with about Cooper Wood is that all of us, and it's not just me and Rod, there's a team behind us as well, we all have direct industry experience on both buy and sell side. So we're not career consultants. You know, we've both, Rod and myself and the team, all hands dirty, done the work. You know, we know where to look for the solutions and for the cost savings, if that's the mandate, and we know how to do it. And we can do it pretty quickly. So we know the participants in the market, we know the infrastructure, and we know how to get the job done pretty quickly.
Thanks, Tim. So what have you seen happening this year as far as the fund management side is concerned?
Well, judging by the number of queries we get and the type of queries we get, and I'll separate out Brexit and I'll separate out COVID because they've both been kind of dealt with separately. But the recurring theme that we've seen from the fund management side has been around cost transparency and cost management. And when we're talking about cost transparency, what we're talking about is the obvious things that aren't new things, which is like FX margins. It's around cash management and some of the things that don't appear on the invoice from your service provider. And despite all of the history that everybody knows around that particular topic, and that it's not exclusive to those two topics, but despite all of the history, there are still plenty of opportunities for plenty of fund managers to get a much better deal than they're getting. And what that leads into is the other recurring theme in the fund management world, particularly in the UK, or especially in the UK, is around the topic of value assessment. And this is putting an increasing amount of pressure on clients because there's two problems here. One is fund managers have been doing their own value assessment. So in essence, marking their own homework. And they've done a pretty good job on the whole. Everybody publishes their value assessment reports online. They're there for everybody to see. But what we're hearing and what we're sensing is that one, the lack of independence, and two, we understand that the regulators are beginning to look pretty closely at, well, what are you doing about it? So you've produced a value assessment, but how are you using that as a plan to do better deals, get better value for your funds, and ultimately for the performance and therefore for the end client? So what we say to the fund managers, particularly in relation to value assessment, but it all links back to cost management and cost transparency, is whatever you're paying a provider, you're probably paying them too much.
Okay, Tim, thanks very much for that. What do you think the challenges are going to be going into 2021 for fund managers and also for the service providers? And what do you think fund managers are going to be looking for from those service providers? And I think, and I'll ask you that question, and I might ask the other two panelists as well the same question. What do you think people are going to be looking for going into the next year at least?
Well, we've talked a little bit about cost and efficiencies and value assessment. If you're not familiar with it now, you will be, whether you're a service provider or on the fund management side. But I think somebody touched on it in fact, you touched it, which was on one of your slides, which is around some of the operational resilience, some of the operational risk and ability to do proper compliance monitoring with everybody operating in a remote environment. The dynamics have changed a bit. And, I think it's very true to say everybody's done a brilliant job in 2020, but I wonder whether the level of patience from tolerant clients and tolerant regulators will start to wane slightly in 2021, and the expectation around some of the things that maybe have been forgiven in 2020 might change a little bit. You can't talk about the fund management industry in 2020 and what the impact will have on 2021 without mentioning Woodford. And I think there is great anticipation around what the FCA will recommend when they finally complete their review about ACDs and the role of ACDs. I think that will have an impact on both sides, the buy and the sell side, quite dramatically. Or clearly it already has, but I think the consequence of that we'll see more in 2021. From a service provider point of view, it's a bit of a recurring theme. The pressure on operational efficiency and costs again. There's more pressure on operating models and restructuring again, and these things continue and will continue. And for everybody who thinks they got a free pass in 2020 because of COVID, those cost efficiencies are just building up for a bit of a double down in 2021 is what we're hearing from the people we talk to.
Thank you, Tim. Very interesting. Perhaps I could ask the same to Rob Ward. What your take is, what the market's going to be expecting from providers going into the next 12 months?
Yeah, so one, agree with everything Tim just said. Again, feedback from our clients is we need value from you as a provider, right? Value doesn't mean the lowest possible cost. It means a cost plus a good level of service that they would expect to get from a provider like ours. That is today, plus looking forward into the future. Are you able to invest to help me with my business growth, right? Whether that's expanded markets, different asset types, different fund structures, and so on. But also, the question that's been out there for a number of years is data and digital. Like, what are you doing? What's your story? What tools can you deploy for me? But importantly, demonstrate that they're going to add value, right? It can't just be data for data's sake. It has to be data with a purpose. The tools have to give the clients something that will help enable their business, either on the cost side or on the control, evidencing their control and oversight side, or helping them in their business growth, reaching their investors, making their end investor experience better, and so on. So I would just sort of summarize that those are the types of areas, in addition to what Tim said, that we expect to see demand for as we go into 2021 and beyond.
Lovely, thanks very much, Rob. May I turn now to Rob Lowe to ask him the same question? What your view is on that, Rob?
Sure, thanks, Richard. You know, data and technology is something I reflected on in a recent piece for Asset Services Times. So I think that's pretty consistent with Rob and Tim's view. I think consistency is going to be a buzzword from here on in as people get back to whatever the new normal might be. How do service providers respond to that when the clients are going through a similar step change as well? Technology is obvious. Brexit, I think people will be keen to see the back of in whichever context that comes around and presents itself. We'll soon know, of course. Another big thing that we haven't mentioned this evening is private assets. I think from what we've seen, certainly the interest in private assets, and maybe COVID has been a bit of a catalyst for this, will continue to shape how service providers respond to clients. I think it will perhaps separate the wheat from the chaff to a degree, as in, will legacy providers really double down and focus their efforts on private assets, or will that be delegated or serviced entirely by more boutique or niche providers in this space? So private assets for me, I think, is a 2021 story, which a bit like Tim reflected on with the value assessment. It's going to be a case of, if you don't know now, then you soon will, and it will be perhaps by hook or by crook, with clients pushing the envelope a little bit by bit, where they're seeing more interest to provide solutions for private investments rather than liquid and listed assets. So a combination of those few things, I think, will really shape 2021. And again, as I said earlier, I think this client's experience is really going to separate some of these providers going forward. If you look at the results, it is operational in terms of capabilities and the response times and all the rest of it for a particular operational query. But there's an element of relationship management still in the industry that will ring true, I think, regardless of cost pressures or cost income pressures, or a race to the bottom in terms of fees and fee compression, all the rest of it. I think overarching all of this will be a focus on relationship management and treating customers in the right way.
Yeah, thanks for that, Rob. It's always interesting in all the surveys that we carry out. One of the things that always, if people want to score well with their client base, the relationship management, client service is always really way up there. It's a very important factor. And I think sometimes the bigger the organisation get, the more that can suffer, and that's certainly what we see sometimes.
Richard, it'll be interesting to see this survey again this time next year with all of the challenges ahead. It's going to be quite a different year for everybody next year. So it'd be very interesting to see whether the scores remain the same or go down, and certainly where the rankings are.
Yeah, I think I completely agree with you, Tim. I think it will be really interesting, and I'm kind of thinking, going through this webinar today, it would be quite interesting to reconvene in about 6 months' time when we've got some more data in there, and just to chat and reflect all these grey hairs, as we said earlier, amongst ourselves, on where the industry is going. I mean, another question might be where we think things are going to be in 10 years' time, because that's, I think there was a paper published yesterday by Issa and Oliver Wyman. We're talking about what the pressures are going to be on service providers going over the next few years, particularly requiring deep pockets to invest in everything that's going to be required of them going forward, from technology, everything else, and also the challenge that some of them are going to face from the big tech companies trying to push their way, muscle their way into the space. It would be interesting.
Richard, in that context, are you thinking of reconfiguring some of the questions that may be posed over the coming months to reflect on what everybody's been through with COVID? And I notice also mine and Tim's old colleague, Peter Christmas, talked about including depository in some of the questionnaires. Is that something you're considering looking out to 2021?
Yeah, I think that is definitely something we'll be looking at. I think the whole depository trustee side is something that we used to run surveys on. We stopped doing it a few years ago when things were getting a bit busy in the business and there was a lot of things changing. But it has been at the back of my mind as something we should be running again. But I still like to keep all these things in different silos. So I think we'll still be running our investor services survey starting at the end of this month. I think I'd like to run another COVID survey completely separately, and we might tag some questions onto the main survey. But I think to do one separately, as we did in May this year, reaches a slightly different audience, and it's quite interesting the feedback we get from them. So I think we'll just take each one separately would be my approach. But yeah, definitely run some more, see what's going on. You know, when things are changing really fast, that's when you want market research and you want to find out. Even if you think you know what's going on, it's always nice to get a check to make sure that what you think is correct. Because hopefully, and I always hope when we do a piece of research, that we'll find at least one little fact in there that you weren't aware of and are able to present. I'm conscious that time is running on now, and we've gone past the 30 minutes I said we were going to do. Do any of the panelists have anything else they wish to say at this point? Nope. Okay, well, I'm just going to say a huge thank you, first and foremost, to our sponsors, to RBC and Pictet for allowing us to put this on, and to our panelists in particular, to Rob Ward and Rob Lowe and Tim Wood, and also Fiona, who's been very good sitting there answering the questions for us. But thank you all for having attended, much appreciated. If you'd like any more information from us or anything, do please feel free to get in touch. We look forward to hearing from you, and enjoy the rest of your cocktail.
Thank you, Richard. Thank you very much.
Thank you, Richard. Thank you, Fiona.
Thank you.
Bye, guys.
Bye.